Ondas Inc. is currently trading at 12.14 USD, which reflects an intraday drop of 0.68 USD, or a decline of 5.33% as of this Tuesday afternoon, January 20th, 2026. While a 5% slide might look like a reason for concern at first glance, the reality of the situation is far more complex than a simple red candle on a chart. If you were looking at the ticker today, you might assume that the excitement from last week's investor day has completely evaporated, but the trading volume and recent institutional activity tell a story of a massive capital rotation rather than a fundamental collapse. Most investors looking at Ondas stock right now are focused on the immediate price action, but what they are missing is the massive technical validation that just occurred behind the scenes. Last week, the company successfully raised nearly $1 billion through a registered direct offering. Think about that for a second. In a market where small and mid-cap growth companies are often struggling to find liquidity, an institutional investor just stepped in and essentially underwrote the company's entire future expansion plan at a valuation that many retail traders thought was out of reach. The common belief about Ondas stock is that it is a speculative drone play that has run too far too fast after gaining over 400% in the last 6 months. The skepticism is understandable. When a stock moves that aggressively, the natural expectation is a punishing reversion to the mean. However, the contrarian view, and the one that is currently being supported by the heavy institutional accumulation we are seeing on platforms like Interactive Brokers and Fidelity, is that we are witnessing the birth of a multi-domain autonomy powerhouse that is finally moving out of the R&D phase and into a high-scale commercialization phase. The reality is that the company just raised its 2026 revenue target to a range of $170 to $180 million, which is a significant jump from previous estimates. While the market is currently selling the news, the long-term structural demand for autonomous systems in defense and critical infrastructure is only accelerating. If we look at the daily swings we've seen over the last few sessions, the volatility is off the charts. Just a few days ago, the stock was pushing toward 14.25 USD on massive volume before this current pullback began. This kind of price action is typical for a company that has recently become a favorite for those using the Robinhood app or SoFi Invest, where retail sentiment can drive quick spikes followed by equally quick profit-taking. But the real story is in the backlog. As of the start of this year, Ondas reported a backlog of over $65 million, which is a nearly 200% increase from just a few months ago. This isn't just hope anymore, it's contracted work. Institutional activity has been particularly interesting, with firms like Stifel raising their price targets to 17 USD even as the stock price dips. They see the $1.5 billion pro forma cash balance as a fortress that protects the company from the usual risks associated with high-growth tech. The pressure from macroeconomic factors, particularly interest rate expectations and defense spending priorities, continues to weigh on the sector. However, Ondas has managed to carve out a niche that spans both the rail industry through Ondas Networks and the defense sector through its Ondas Autonomous Systems unit. This dual-threat model provides a level of diversification that many pure-play drone companies lack. While the Tesla stock narrative dominates the broader autonomy discussion, the ground-level reality is that companies like Ondas are winning the contracts for boring but essential tasks like border security and rail infrastructure monitoring. Comment below how many shares of Ondas Inc. you currently hold, or if you are waiting for a deeper dip to 10 USD before jumping in. To understand where we are going, we have to look at what this company actually does. Ondas operates through two primary divisions that are increasingly becoming integrated. Ondas Networks provides a proprietary wireless platform called FullMax, which is designed for mission-critical industrial applications. Think of it as a private, highly secure internet for the things that cannot afford to fail, like the North American Railroad system. They are currently in the middle middle of a multi-year upgrade cycle with the Association of American Railroads to implement the .16 standard. This is the kind of legacy business that provides a steady, predictable foundation. Then you have Ondas Autonomous Systems, or AOS, which is the high-growth engine. Through acquisitions like Aerobotics and RoboTeam, they provide a drone-in-a-box solution that can operate 24/7 without a human pilot. These systems are being deployed at oil and gas sites, mines, and increasingly on international borders. In the past, the criticism of Ondas was that it was a collection of interesting technologies that didn't have a clear path to profitability. The historical reports showed heavy cash burn and consistent losses, but the transition we've seen over the last year has been about scaling those technologies. The acquisition of RoboTeam, for instance, added tactical ground robotics to their portfolio, allowing them to offer a full-spectrum autonomy solution. This is why you see so much discussion on investing sites and among those who use Schwab Intelligent Portfolios about the shift from speculative to strategic for this ticker. The company's move to West Palm Beach and its recent rebranding to simply Ondas Inc. were not just cosmetic changes, they were signals to the market that the company is maturing into a global defense and infrastructure player. Looking ahead, the future outlook for the stock depends heavily on its ability to execute on that $180 million revenue target. The catalysts are clearly lined up. We are looking at potential new orders from the Israeli Ministry of Defense for their automated drone hives and a likely increase in U.S. defense spending for autonomous systems. The risk, of course, is the execution. Scaling a hardware-heavy business while integrating multiple acquisitions is notoriously difficult. If the reality of their 2026 earnings falls short of these new elevated expectations, the stock could easily see a much deeper correction. However, if they can maintain this momentum, the current 12.14 USD price point might eventually look like a significant base of support. For those who manage their own individual brokerage accounts or use platforms like Fidelity Wealth Management, the decision often comes down to risk tolerance versus the potential for outsized returns. Ondas is not a set-it-and-forget-it stock. It requires constant monitoring of contract wins and regulatory shifts, but when you compare it to the valuation of some of its larger peers in the aerospace sector, there is a clear argument to be made that the market is still catching up to the scale of the opportunity here. The expectation was that the company would need to keep diluting shareholders to survive, but the reality of their recent massive capital raise has completely changed the financial narrative. They now have the cash to outlast their smaller competitors and even challenge the incumbents. In summary, today's 5.33% drop is a classic example of the tension between short-term market noise and long-term fundamental shifts. The expectation was that the investor day would lead to an immediate, sustained breakout, but the reality of a sell-the-news event combined with broader market pressure led to this pullback. Despite the red on the screen, the core thesis for Ondas has actually strengthened over the last 30 days. They have more cash, a larger backlog, and higher revenue targets than ever before. For the smart investor watching from a coffee shop, this isn't a moment of panic, but a moment of clarity. The company has moved from a survival story to an expansion story. Whether you use Robinhood crypto or traditional Fidelity mutual funds to diversify, keeping a close eye on these mid-cap disruptors is essential for any modern online investment strategy. The depth of the transformation at Ondas is real, and while the price movement is volatile, the underlying business is finally starting to match the ambition of its technology. As we wrap up this analysis, it's important to remember that the gap between what the market expects and what the reality provides is where the most significant opportunities are found. With Ondas, the market expected a struggling startup, but the reality is a well-capitalized autonomy platform with a multi-billion-dollar potential. The volatility we see today is just the cost of admission for being involved in a sector that is redefining how infrastructure and defense operate. operate. Keep your eyes on the 10 USD level for support and the 15 USD level for the next major resistance test. The authority of this company in the autonomous space is growing, and today's price action is just one chapter in a much larger story of market revaluation.